The Building Better Business podcast is the best place to learn how to take your business to the next level. It's no longer enough to earn good profits. You need to develop a network of connections as well as use all types of marketing to your advantage that will put you over the edge. Hosted by me, Steve Eschbach, a financial executive with decades of experience in dealing with businesses and business people, we'll learn how this all comes together. Join me and my expert guests as we delve into the many facets of owning the business and how to become a good, caring business owner. Listen how making a difference in your community can attract all sorts of clientele, which in turn will build you a better business.
Greetings of the day, everyone. This is Steve Eschbach, your host to Building Better Businesses, the podcast here that you have been watching, I hope, many times over. I am the president of Transworld Business Advisors here in Naperville. I'm one of 7 Chicagoland business brokers here under the Transworld umbrella. Transworld is the largest business brokerage in the world, and we are the fastest growing business brokerage in the world. We cater to small to medium-sized businesses, and we assist business owners confidently sell and match them with qualified buyers. I'm delighted to bring you another broadcast here of Building Better Businesses, this time with a colleague in the investor relations arena. Both Dan Aldridge and I had done investor relations for a number of publicly traded companies. We'll learn a little bit more about that from Dan's perspective in a moment. But first of all, Dan, I want to thank you for joining us today. Welcome to the show, and tell us a little bit about who you are. Oh, before we do that, I have to make this disclosure. Dan and I were partners with his firm, Asbury Investor Relations, a short while ago. We have both parted our ways. He stayed where he is. I moved back on to Transworld and have chosen a different path at the moment. But Dan, tell us a little bit about Asbury IR and a little bit about yourself as well.
Yeah, thanks, Steve. Thanks for having us on the podcast. Really appreciate the opportunity. So Dan Aldridge, I'm the CEO/founder of Asbury Investor Relations, and we are a boutique investor relations firm located in Atlanta, Georgia. We mainly focus on small and mid-cap companies. So the way to think about that is kind of companies with a market cap, somewhere under $5 billion. And we help them with their investor relations strategy, and that kind of covers everything from special projects to full outsourcing of investor relations functions and processes to full-on ESG strategy work. And we've gotten involved in several different sectors, mainly in consumer, industrial, and energy at this point, but we'll be getting into tech and healthcare later in the year. And we also have branched out into catering to the retail investor over the last 3 months with the phenomenon that we've seen there, which I'm sure we'll probably get into a little bit. And then prior to starting the firm, similar to Steve mentioned, held several investor relations roles at various public companies, all different sizes, all the way from the mega cap of the Home Depots, down to the small caps of the mall-based Retailer Express. So with that, I'll kind of pause and turn it back to you, Steve.
Yeah, so you mentioned an acronym called ESG, and some of our audience members may not be familiar with that. So you want to expand a little bit on ESG?
Yeah, so ESG stands for Environmental, Social, and Governance. And the framework has been around for a while. It actually used to be referred to as CSR, or Corporate Sustainability Reporting. And ESG has kind of taken on greater importance over the last, call it really 3 to 5 years. As more companies start to focus more holistically on their strategies and how they impact, the broader communities and the environments, in which they live and work and serve. And, a lot of this, had been going on, for years and under different umbrellas and in different areas. So, most companies, have a philanthropic arm, where they give back to the communities, whether that's through financial donations, or time. They also, a lot of companies have sections around what they do to support different initiatives within their communities, within the environment. And then, also on the G side, you have shareholder activities. You think of corporate governance. All of these have become much more important over the last 3 to 5 years. And really, the big companies of the world have really already started moving down this path. It's really the smaller companies now, who are realizing that, they too need to start getting behind this and really amplifying some of their strategies.
So it's interesting that you mentioned this, Dan, that publicly traded companies in the billion-dollar range or even bigger or smaller, that community involvement, that kind of focus on being involved with where you are, being a environmental steward, if you will. That's critically important no matter what size company it is, whether it's a $100,000 a year company revenue-wise, or it's a $1 or $2 billion company revenue-wise. It seems like people who are investing in those types of company do care about that.
Yeah, well, and it goes kind of back to the title of the podcast, right? Building better businesses. And, one way to do that is through talent acquisition. And when you look at, what's driven the change in the ESG space over the last, call it year and a half in the United States, quite frankly, a lot of it's been around, social change that was driven by social unrest here in the United States last year. And, a lot of companies, smaller companies, hadn't taken a position there. And I think a lot of them are viewing this more as a proactive measure and to be a differentiator when it comes to, hiring talent, recruiting, retaining, and really separating themselves from other companies. And so more than ever, you have HR departments and heads of HR, who are leading some of the initiatives in the ESG space, especially around S. And, as you well know, if you don't have the right people running your organization, it's not going to be successful.
Absolutely. So to take that one step further, and you and I both have investor relations experience over the past, like you said, 3 to 5 years, many corporations are in fact dedicating resources and effort into developing a separate ESG report that is separate and distinct from the annual report that you and I are both familiar with. Is that correct?
Yeah, they are. And some of them are integrated, and you're starting to see more of that as we go forward, kind of the integrated framework from a reporting standpoint. But today, most companies separate out the two, and they either have a CSR report that they issue kind of in conjunction with the annual report, or they issue it together as a single report. You've also seen the trend really over the last year and a half to move to fully interactive websites versus kind of standalone PDFs. So you can get more interaction, more infographic type material, as things are going along. And I think you'll continue to see that, but the trend has definitely shifted towards digital. And the other big trend, and you kind of hit the nail on the head, is, you don't have to be $1 billion company, to have an impact in the ESG space, right? You can be a small private company. You can employ 10 people, but at the end of the day, everybody wants to work for a company that they're proud to work for. And whether that company is 10 employees, 100 employees, or 100,000 employees, to the extent that you can do things, to provide value to your employees, and make it a more attractive place to work, the better that's going to be for you, again, whether you're a small company or a big company. And while you may not be Home Depot and you may not be able to put in all the processes and procedures, you can definitely put in initiatives at smaller scale that will have an impact for your community and your associates.
So that's good to know. Thank you so much for that, Dan. Now, you, like many of my other guests, are a former corporate executive officer. You worked in investor relations, as did I. Now you own your own little company on your own. You have a consulting firm that's kind of evolved from your past experience in investor relations. But we're going to rewind the videotape much, much further. So let's go back to your childhood. Where were you born and raised, and what kind of childhood did you have? What kind of parental and family influence did you have while you were on your tricycle on your hometown street? Probably back then, I don't know if you were thinking about investor relations or ESG. No. But what was going through your mind when you were growing up, and how did that evolve when you went to high school, college, and where you are today?
Yeah, so very diverse childhood, a lot of different experiences, a lot of travel. Born and raised in Athens, Georgia, home of the University of Georgia, actually where I went to undergrad and graduate school. My father was an attorney. My mother was a teacher. And being a teacher was probably the best thing I could have had as a mother, because she kind of taught us everything. And she definitely believed more in hands-on experience versus kind of rote learning. And so, apart from learning things, she took us everywhere. By the time I was 18, I think I'd been to every state in the country, probably 3 or 4 different foreign countries. Could speak Spanish at a pretty good clip. Wasn't fluent by any means, but she exposed me to that because she lived in a lot of different countries growing up. And so that experience definitely shaped kind of my career as far as, wanting to do a lot of different things, and then in coming out of school, had no clue what investor relations was. My degree is in accounting. I actually have a master's in tax accounting, which most people find incredulous, considering I'm more of a creative type person. But I never actually used the master's in tax. I've done my own taxes. That's about it. And then from there, got into internal audit. And, that was a fascinating place to kind of cut your teeth in corporate America, because apart from investor relations, it's probably the only other department, that has access to all the different departments in the company. So you really get, a preview of all the things that are going on. And then with internal audit, you can see all the problems, and understand kind of what things need to be fixed. But you're working, with a lot of the executives and officers kind of at that level. And through that, just got to work with a lot of different really interesting executives, and kind of got tapped on the shoulders like a lot of investor relations people do. And they said, wow, you can do finance and you can talk. So that's fair. Maybe you should do investor relations. And that's how I got into it. And I'd always kind of loved the finance analytical angle of it, but then really loved getting into the strategy and really helping the companies articulate their message, and really the discourse with the investors and the analysts, on either proving or disproving their investment theories, on the individual companies, or the industries. And I've always loved travel. And I kind of alluded to that earlier. And so investor relations, you get to travel a good bit too. And so it kind of scratched all my intellectual curiosity itches. And did that at Home Depot, really big company. Was fortunate enough to be there through their metamorphosis and their change. I mean, when I started, not to scratch my back, because it was definitely not on my doing, but their stock price went from $14 to $124. So I had the pleasure of being there through that, and then also through a CEO change and being able to work with investors through that. And then from there, had the opportunity to move to Chicago, to your neck of the woods, and help start an investor relations department for a smaller company, $15 billion company, which kind of shows you the demographics, right? I mean, that's quote unquote a small company in the public realm, but really more the mid-cap space. And then from there, just had more opportunities, and just kept taking opportunities, whether they were lateral transfers or promotions to get into different industries and just to get different exposure to different things. And so I had the opportunity to move back to Atlanta and run IR for Intercontinental Exchange, or ICE, who owns the New York Stock Exchange. And so got heavily involved in the capital market space, and really got a front row seat for all the regulatory impacts, that MiFID II was going to have, that the SEC was going to have, on our industry. And that's kind of played out over the last couple of years. And, you've seen continuing deterioration of the sell side, from a research perspective. And, you have the rise of ESG, which we talked about. And you've got the phenomenon of active investing to passive investing. You've got, I think I mentioned activism before, and now you have retail investing, that's not going anywhere. And all these things, aren't part and parcel, to most companies' investor relations strategies. So it became quickly apparent that there was going to be kind of a void in the market. And so we kind of set about establishing a company that was going to be different, and that was Asbury. And, it was going to be based off of experience, not volume. And when you look at, kind of the advisory space and investor relations, it's really driven by volume. And there's a couple large players and some small regional players, but for the most part, they're career consultants, and career salespeople. And I've worked with every single one of them. And the experiences were fine, but you, on average, work with a junior person, that had never been in the arena, and had never done the work. And so while they were good to be an extra pair of hands, they weren't rolling up their sleeves and doing the work. They weren't talking to investors. They weren't holding the hands of management. And what does it take to do that? It takes experience. And so when I set out to make my firm, one of the key tenets was we need to go find people that have 20 years plus experience, who have worked in multiple Fortune 500 companies, who have been directors of research, who have been investors, right? Who have the scars, who can go to a management team with a straight face and say, I've sat across the table, from a Nelson Peltz, or another activist. And this is how we handled the situation. And so anyway, I actually have the least amount of experience out of anybody, on the team. Everybody else has 20, 25 years plus. And so we like to tell CEOs, and CEOs that we've kind of seen everything, from an investor relations standpoint, and if we haven't, we know somebody that has, and then the other biggest, skill set / experience criteria, in this world is credibility, is trust. And, that's only developed through decades, of working with people in the financial services world. And you can't get that overnight, or by being a salesperson. And so that message has definitely resonated, especially coming out of COVID, and so this year, is going to be a big year for us. We've done a lot more ESG projects, doing a lot more actually projects with larger companies. I mentioned before, we started out mainly focusing on small and mid cap. but we've seen kind of the value of the experience that we offer, be transferable, across market caps. And when you think about ESG, when you think about, retail investing, all that, applies across market caps, across kind of investors. And, so that's the other kind of big thing that we're working on right now, is really trying to figure out how do you democratize shareholder access, and as an individual shareholder, how do you take control of your financial future without depending, on Wall Street banks? And that's what I've been working on for the last 3 months.
Your concept here and your philosophy is quite interesting because it applies to whatever size businesses that you're working with. So for me, I'm dealing with much, much smaller companies. We don't talk about billions. We very often get into millions, but not so much in the multi-million. Long story short, when I prepare a seller to sell his business to a prospective buyer, it's sort of like you preparing a CEO going to Wall Street and telling the investment community the story of the company. So if I understand what we've done, meaning me and you in our past, you're preparing the C-level executives to be able to respond to the questions that will likely come from Wall Street so that they can respond in a real timely manner. And that's where the relevant experience comes from. I think that's what you're saying. So tell me a little bit more about that and tell me how you and Asbury, so you're focused in on finding those companies that need that communication skill sets that they need to provide, but they don't really spend that much time on. Is that kind of what I'm saying or what you're saying?
Yeah. And when you think about why we focus on small and mid caps, right, it's where we can add the most value and where they have the biggest resource constraints. And so when you think about a big shop like a Home Depot, I mean, they have 7, 8 people, in their investor relations departments. When you get into the small cap world, they're lucky to have one. And usually that person, he or she is wearing multiple hats. So not only do they have investor relations, but they have FP&A, they have M&A, they have treasury, they have corporate communications. And so investor relations just becomes, this thing on the side that they have to do. And, a lot of it, quite frankly, is triage and it's getting through the quarterly earnings process. But what they can't do is they can't turn their investor relations department, into a proactive, value creating department. Instead of just a cost play to structure. And so what you've seen is where we can come in, we can proactively put together marketing campaigns, to reach out to new investors, that you may not have reached out to before, to reach out to new sell side analysts, to help you cultivate those relationships, to help better tell your story. Think about things like ESG, being able to have the time to really go through all of the resources and assets that you have today and telling you, based off of not only our experience, but what everybody else is doing in the industry, where you rack and stack against everybody else and how you can move the needle. And so it's all about adding extra value, to these companies, that just don't have the resources to do it today. And, in the large cap space, when you've got that 7 or 8 people, you have the extra bodies to be able to come in and do some of that work. But then again, it goes back to, you have to have the experience, and the trust and credibility to be able to do that work. And without that, I can't go with a straight face to a CFO or CEO and say, yeah, we can come in and do this work without having that decade plus experience, in the industry, knowing those investors and knowing the analysts.
So Dan, what are the 3 top questions you will go into a prospective client of yours and ask them these 3 questions and figure out how best you can help them out? What would be the 3 common elements that seems to be lacking in a small to mid-sized publicly traded company?
Yeah, first and foremost, is what story are you trying to tell? And I think that goes with, why are you a public company? And, what you've seen over the last kind of 10 years and even more so now with the SPAC craze, is a lot of companies going public for necessarily the wrong reasons or going accelerated at a certain time. And so a lot of these small cap companies, while they're really good at their operations, and running their business strategy, they don't have a proactive strategy from a communication standpoint to reach out to the investment community, to let them know how they're different, how they differentiate. And what has changed for the small cap companies over the last, like I said, 3 to 5 years is the number of people that are telling their story. And before 2018, when MiFID came into existence, a lot of these companies depended almost exclusively, on the sell side analysts to help them tell their stories, to help them, get introduced to investors, to provide all the logistics around those meetings, because the companies didn't have the resources to do it. And now the sell side, because of MiFID II and other regulations, aren't being compensated to do that anymore. And so what happens? They stop doing it. And so now, these small cap companies are in a world where no one's telling their story, and they're competing with thousands of other equities. On any given day, the average PM is looking at a basket of 100 plus stocks, and they're getting inundated with inbounds from pitches from companies of all sizes. And so you've got to have a good pitch that sticks out. And if you don't, and you're not proactive, it's like a tree falling in the woods and there's no one there to hear it. And, I can't tell you how many PMs, tell us that. And one of the services that we provide for a lot of these small companies is basically acting as the sell side to the sell side, and keeping that dialogue open. But it goes back to your question on, what is the first question? So what story are you trying to tell? And what's the ultimate goal in this? And it seems kind of simple, but most companies can't tell you that. If you have a new investor that can own 10% of your stock, you've never met with them before, you're meeting with them tomorrow, you got 10 minutes. It's like, what's the first 5 minutes of that meeting, that are going to get them hooked? What's the sales pitch? And I think that's the problem with too many investor relations strategies today, especially for small cap companies, is they're not sales pitches. They don't look at it that way. And you have to be aggressive, because at the end of the day, you're a product. And you're competing against many other products, which are other equities that are out there, and kind of gone are the days of just being able to put up good results and the investors will follow. That's just simply not the case, especially in the small cap world. So that's question number one, which I took a long time to answer, but it's the most important question, which is kind of, what story are you trying to tell? Then the second question, after that, is what's the time period? What is the time horizon, that you're telling the story? Because most of the stories have an arc, and at the end of that arc is some kind of long-term goal. So whether that's an operating margin goal, an EPS goal, a revenue goal, you need to have something that's measurable, right? That you can talk to every single quarter, that the street can hold you accountable to. And so that's kind of question number two. And it goes kind of back to the sticky question that we talk about in investor relations all the time, which is guidance, and trying to understand, if I'm going to be measured by a metric, I need to think long and hard about that. And I need to make sure that, it's in my control. And I need to pick the 2 or 3 metrics that matter most to my company and to the investors, and not boil the ocean. Because the other issue that companies fall into is its overflow of information. And I can give you countless examples. We've got clients now, that are doing it. And they think the more good data we can put, the more, incremental benefit we're going to get. And it's just not the case, because it's a law of diminishing returns, and investors just get data fatigue. So tell me what matters. Don't tell me about the 15th stat that really doesn't correlate, with your results. That's really kind of question number 2. And then question number 3 is the commitment question. It's like, how committed are you to do this? Meaning, in order to do a lot of this work, we've got to have buy-in from the top, meaning CEO and the board. And, if you don't have that, the project flounders. And even if we sign a contract, we can find ourselves a month into that, kind of in limbo. And there's not a lot of direction from the CEO, or projects get delayed. And so that's 3 questions. What's your story? What is the time horizon that you're telling the story? And what support does the story have? Because at the end of the day, that's what we're doing. We're storytellers.
So Dan, your points are well taken for those publicly traded companies that are effectively and repeatedly communicating to Wall Street. But for those business owners out there, if you're not publicly traded, you still have relationships that you've got to establish, maintain, and enhance. And those items that Dan was talking about are critically important at that level as well. We're going to lose some time here. So I want to ask you one question now. You went from the big corporate where you guided CEOs. Now you are your so-called own CEO. How are you guiding your employees in terms of getting Asbury IR to where it needs to go?
Yeah, so communication. And then I have my own advisory network. So it's kind of like a mini board of directors. That's not really officially a board of directors, but I have a group of probably 5 or 6 people that I talk to on a regular basis, that I bounce ideas off of, and then try to be inclusive and include everybody in open conversations, on everything from strategy, to outreach, to really kind of get diversity of thought, because, a lot of what we're doing is new. I'll give you the example of the retail trading phenomenon, that we're currently under. There's a lot of misinformation that's out there. There's a lot of different groups that are driving this, a lot of different demographics, that are using different vehicles and mechanisms, to both transact and to communicate. And the audience, at a traditional retail conference like a money show, which I'm actually attending this week in Orlando, is very different, from the audience that's on Reddit, that's on Wall Street Bets, that's driving a lot of meme stock craze that's going around as well.
So Dan, that advisory board that you were referring to, the 5 or 6 people, that's outside of Asbury IR. So those are fellow business owners like yourself.
Correct. Fellow business owners, nonprofits, just people I've met throughout my career that I've respected on some level, or have given me advice, or that are I consider much smarter than me, or have had much more success than me. And so I've always been a big believer of you can't be successful unless you surround yourself with successful people.
And it doesn't necessarily have to come from within. It can come from around. And a lot of times that's helpful, even if you're not in the same industry. If you have concepts that are relative to Asbury IR and some of the others in your so-called advisory group, I think the sharing of those ideas will enhance your business going forward, no doubt.
Yeah, one of my favorite sayings is that nobody has a monopoly on good ideas.
There you go. Absolutely. So we're about at the end of our time, Dan. Is there anything that we haven't covered in the Q's and the A's that we had gone through at all that you want to make sure our audience knows about?
I think some of the things that you hit on, are very pertinent. And, whether you're a public company or a private company, and at the end of the day, it's like you need to control your message, whether that's to investors or customers, or to associates. We all have multiple stakeholder groups, that we're beholden to. And, I think about when you think about building better businesses, history has shown that, to the extent that you can bring in more stakeholder groups and get more diversity of thought, the better off that your business is going to be, going forward. Very well said. Last but not least, Dan, how can we find out more about you and Asbury IR? So tell us where to go to find So you can obviously find me on LinkedIn, just Dan Aldridge. And then obviously on the web, we're just at asburyir.com. And you can see all the information there. If anybody wants to reach out to me, I'm just Dan at Asbury IR. So pretty easy to find, and always willing to talk with anybody. Apart from the Monopoly quote, my other favorite one is there is no wasted meeting.
It's so funny. I crack a smile when I close this meeting here, this podcast. I went and looked you up today. You are probably the only person with a profile picture with a mask on. I don't know if that's going to change down the road, but that
it actually already needs to change, to be completely honest. I've just been too lazy. I've got too much going on. This is the 7th week in a row I'll be on the road. So hopefully after that, I'll be able to make some changes.
Sounds good. Dan, thanks so much for your time. And audience, thank you for your time and listening with us. And please be sure to join us for another edition of Building Better Businesses.